folks? I'm the Savage of Wall Street. Welcome to my channel once again. We're going live for the second day in a row now. So, just wanted to come in here and do a little quick, 30 to 45-minute video so that you guys can kind of, get your 2 cents in, right? And let me get my 2 cents in so that we can maybe talk about what the expectations are for the coming up trading week. It's going to be a shorter week, so time decay will happen a lot faster. For those of you guys that wrote, 2-3 weeks out, this week is probably going to decay a lot faster than most, which is a good thing. Because if you guys know anything in my channel, we like to talk about options trading. We are the casinos. We are not the gamblers. And if you very well know, whenever there is some gambling involved in casinos, casinos never really lose, right? 90% of the time, a casino is going to win. It's just the way that it's designed. Don't get mad at me. It's the way it is. So I'm just trying to get, my piece of the pie here. What the Dow is at 40,000 points at this point, right? The Nasdaq is at 16,700 points. S&P 500 is at 5,300 points. What should we expect, right? Well, given the underlying market conditions, I'm going to give you guys a little bit of both perspectives, right? We're going to talk about some bullish perspective, and we're going to talk about a little bearish perspective. If you guys know me, you guys know that I'm a bear by nature. And it's not that I don't trust the stock market. I like to think that sometimes companies like to overvalue themselves. And I don't like to pay too much for stock, right? If I'm going to own a company, I like to buy it low or as low as possible. And sell covered calls, whenever there's a run of 10% or more, so that I can generate income, right? That's just how I roll. Everyone is different. You guys can buy stock, wherever it is that you see fit, and then you can hold as long as you want and then sell for a profit. There's nothing wrong with that. At the end of the day, there's 101 ways to skin a cat, but if you have a naked cat, that's what matters. Now, personally, I think of my portfolio as a building, right? And I myself are the landlord. The companies that I hold in that portfolio, those are tenants, and they have to pay rent. It's just not personal. It's just the bottom line. And it helps me generate income so that I can pay my bills. Sometimes I pay more bills than others. Sometimes I deviate some of those funds to buy more stock on the cheaper. But for the most part, I'm always moving the ball. I'm always generating some type of income so that when we do have downturns like the last few months on the market, I don't feel like I'm holding the bag, right? And I think that most people that are at this point investing in the stock market that came in the last 3, 4, 5 months, they came in at a high, right? And they bought stock, NVDIA maybe at 140, 150. They bought maybe SoFi at $17. Other people may have bought, Unity at $27, $28, C3.ai at $30, and so on and so forth, right? But Microsoft, Tesla, NVIDIA, all these other companies have been going through 52-week highs, and that was kind of when the market was frothy. So some people bought there, and now they're holding the bag. People like myself, that we have been investing for a few years now. We are options traders, especially options traders are very niche, and it's a very small percent of investors that actually trade in options. And that's exactly what I like to talk about in my channel, right? Just generating income so that you can make, again, passive income and use it so that you can pay for bills. I personally have, paid my mortgage a couple of months with this passive income. I have paid medical bills. I've bought, different appliances for the house. And I like to pay for little vacations that we take. There's nothing wrong with that at all. Now, could I have used that money to buy more shares? Absolutely. But right now that the stock market has tanked, I would be feeling pretty bad because I'm holding the bag, right? In the general sense. However, I was able to use that money that I generated, right, or that cash flow to put it to work. And I feel a lot better than just, feeling like I'm holding the bag. Um, Now, let's get back to the stock market in the trading week ahead, right? We have had some strong weekly gains, right? There's a lot of volatility in the indices, but they have generated some significant gains in the last week. However, don't forget that we were kind of at 37,000 in the Dow, right? And so, yes, the Nasdaq Composite rose 7%. The S&P rose, 5.7%, and the Dow rose 5%. But overall, it's down like 10-15%. And so, at this point, more of the same. Earnings seasons is kicking off, right? And I'm looking forward to seeing what these companies have, in store for us. What are they going to say about the last quarter? Are we looking for some positive forward guidance? Are we looking bearish? I happen to think that we may be looking a little bearish. I think that forward guidance is going to go down some. But nobody knows what the market's going to do tomorrow. Let's see, what do we have here? Wing Commander, hello there. What up, Wing? Yes, sir. Yeah, baby. Good to see you, man. I'm glad that you're catching me. I think you're in Europe at this point, so thank you for watching, brother. And thank you for all your positive input all the time. Miguel Angel Picon Salazar is saying something I don't understand. Natalie, what's up, Natalie? How you doing? Ricardo Canales, I'm going after in SOXOL and SMCX like you. You know what? Those are hedges. SMCX is a hedge, and SOXL is a hedge because the market's turbulent, right? And I like to take advantage of turbulence. I wait for them to have a ridiculously low day and maybe at 52-week lows, and they're going to explode when they do explode. However, don't be afraid if you're holding over a couple of weeks and it's just not going your way, because when they spike really quickly. So it's one of those are some of those ETFs that are like 3x and 2x leveraged. For those of you guys that are new, I don't recommend this at all. I recommend these for people that have been trading for a while and can stomach a 30% movement in a day, either way, right, up or down. And basically that's just a hedge that I use so that I can make some good coin on days, like the past week or two, that we have some ridiculous volatility in the market. I'm getting paid. So whether the market goes up, it goes down, doesn't matter. I'm getting paid through either cash secure puts or covered calls, and that's how I make my money. And that's what I'm trying to talk about in my channel. So you guys, if you're paying attention, you can make some good coin. All right. Oscar Davila saying, what's up? What's up, my man? Oh, Tom Kaufman, happy Palm Sunday. Happy Palm Sunday, my man. I was baptized Roman Catholic. I'm a pretty horrible Catholic per se, because I don't really practice, but I'm of the thought that if you are a decent human being, right, and you do right by people and try to live as positively as possible, you should be okay. Wing Commander, you are not in the middle of the night for a change. I'm not actually. It's midday here in California time, so I figured kind of this is a happy medium. I think there's some people in the Middle East that are watching me, and it's kind of like I think it's the evening at this point. I don't know what it is for you over there, maybe 4 or 5 p.m. But what are you gonna do, right? I can only do what I can do. I have thought about going in at night, right, and doing lives at night, but sometimes it's just not possible. And right now, it just so happens that I have something with my daughter later on. She's got some soccer practices to go to, so I figured I have an hour right now, so I'm gonna go in and say what's up. All right, so here we go. What else? Savage, Alex, Savage, linking this Euro-friendly broadcast time. Oh, liking it. Right on, man. I'm liking it too because obviously you guys are on, and you guys can definitely feel free to give me your thoughts on something that you may have a question about. And if you have some comments, feel free. Oscar Davila, 1 p.m. in Merida, Yucatan. Hey, yeah, man, I love Mexico. I've been to Mexico a couple of times, and I absolutely love it. I love Mexican people, and I do have a lot of credit cards that I got rack up points in, and I take trips. I go to Mexico, and there's nothing better than traveling for free. I'll tell you that right now. You use those United airline points, and you use your American airline points, or Alaska points. A lot of people don't know that Alaska Airlines actually goes to Mexico, and yeah. So although I am not Mexican, I do speak the language perfectly well, and I love my Mexican people, man. There's a lot going on right now in the United States. The anti-immigrant sentiment is pretty horrible, but people in my channel, we stick together, right? We stay positive, and we try to like stay out of politics as much as possible because the stock markets don't care what skin color you are, what language you speak. They just care that you have money, that it clears, and that you use it. So that you can leave the money in there if you don't know what you're doing. Alex, something you said yesterday stuck. Find companies with multiple revenue streams. Great advice. Yeah, so like SoFi is one of them. Yeah, don't look for companies that only have one revenue stream because it's just if something happens, right, and there's a disruption, you're done, right? You're kind of cooked. So we're trying to make sure that every company that I look at, I like for it to have more than one niche, right? Because that way they can just keep going, and you're not at the mercy of that one specific revenue stream, right? So speaking of, today I'm going to be talking about a couple of them that I like. I want to start doing this where I go on live and I talk about my Savage stocks, so you guys can have a little more in-depth analysis of what makes me like the companies, right? I do know that I do come in and I talk about the Savage 10 at times, right? But I never really go in depth into the nitty gritty. I just say I like this company and I tell you kind of like why I like it, right? But like I don't really give you specifics because it's really hard. Some people I think they don't really like that, and also I only have so much time that I can speak, right? And honestly, I'll tell you, I do over 100 hours per stock that I'm looking at of research, and I really could go on for 2-3 hours on every one single company that I invest in, and I just don't think people want to sit down and listen about a specific company for 3 hours. I mean, some people probably get bored to death. I'm sure there's like one or two, kind of weirdos like me that like really like to get into the specifics and nitty gritty, and they would probably take some awesome notes. But like overall, people will get bored after like, a couple of minutes. But anyway, so yes, I'm going to be talking about C3.ai, which I love. It's one of my babies. About Rivian, again, one of my babies. I do like to invest on it and sell my covered calls and cash secure puts whenever there's some bearish sentiment in the overall market, so that I can, again, create some cash flow, right, and use it for whatever I see fit. Open Door Technologies and so SMCI. SMCI is actually one that I just started investing in the last year, and I'm really liking it. I like exactly what they have going. I like the revenue streams that they created for themselves. I like the position they have in the overall market, and I just the premiums are insane. So there, what's there not to like, right? Anyhow, so yes, global monetary is easing when it comes to the week ahead. In response to the trade tensions, I think several central banks, including those like in India and New Zealand and the Philippines, they have cut interest rates. This global monetary easing could provide liquidity and probably support some financial markets. And I honestly think that that's probably where we're going. These tariffs anywhere from 10% to 145%. they're gonna choke the market, right? And then at this point, you're preventing the overall free market from being right. And so I think that the Fed is gonna step in. They're gonna take some steps that I think the market is gonna find positive. The question is, at what cost, right? And that's the one conundrum that we, as investors, we like to know the answers to those questions, right? The market doesn't like uncertainty. And so, but personally, the more volatile the market, the more chaos, the more cash. Chaos is cash in my book, right? And it's on my little thumbnail. Chaos is cash, baby. So get paid. Get paid and look at different companies that you're attracted to. Do your due diligence, right? Don't just go off of what I say. Look them up. Every company that I'm talking about, you can Google right now as I'm live, and you can look at it and be like, oh well, you know what, the Savage is right. It does create this much revenue. It does have a positive outlook. It does it is managed very well, and so on and so forth. Or you can say, hey, have you looked at the downside of this? And I assure you I have. And I think that a lot of companies that I look at, most of them, if not all of them, the positives outweigh the negatives, and that's exactly why I like to invest my hard-earned cash on them. So again, investor sentiment, resilience is going to be one of those things I'm looking at. Despite concerns over tariffs and the economic slowdowns, right? Investor sentiment has shown resilience. People are buying. Look at what happened in the last week. We had some bearish, some really bearish days, and then people came in and just started buying and buying. And I fear some companies actually are overbought at this point, at least in the short term, right? And so there was a strong rebound in equities in the last week. Are we going to see that, this coming up week? I don't know. I think that, President Trump went on TV and said that he's going to lift some tariffs, right, from some companies or some countries, and it's going to be one of those where there's going to be a pause on other tariffs, and he's going to levy some tariffs. But again, we don't know what the market's going to say, so let's just be prepared for either case. That's just the way that I roll. I think you should definitely have a plan A, B, and C in case the market goes up. You're going to do these things, and if in case it goes down, then you're going to do these things, right? And so that way you're not caught flat-footed, and you could have a good idea on how you're going to react. And that's the main thing. Is just it's really hard to be proactive in the market because you're trying to time it. But if you are reactive in a very intelligent way, and you take into account the risks, you take into account the overall macro and micro sentiments of the overall economy, and we're talking about as a whole, right? I'm not just talking about the U.S. economy because of globalization, right? Everything is linked, especially with the internet nowadays. So potential policy reversals, right? There's speculation that the U.S. administration may consider or adjust tariff policies in response to the market reactions. And is that going to alleviate, stress? Is that going to tell the investor, like you and I, this is it. This is all we're going for, and I think we're done. I don't think so. It does alleviate concerns in the short term, right? But in the long term, I don't think this administration can be taken seriously because they reverse sometimes within the hour, within minutes. You'll have them saying one thing, and then somebody else from the administration that's, kind of one of the key people in power, right, and government is saying something completely different than the executive branch, and there is no clear message, and I think that is exactly what is happening. And why the market is being spooked the way it is, and people are hesitant, right? Now, I did say that I was going to talk about some companies that I'm investing in, and Open Door Technologies is one of them, right? It's one of the Savage stocks, baby. and I'm making it one of the savage talks because I just think that there's a lot of upside when it comes to the future of Open Door. The ticker is open. It's OPEN, and I think it's under $1 at this point. Great entry point for a lot of people that are not aware of it. And if you guys know me, you guys know that I like my stocks on the cheap, right? I love cheapies, and so this is a great entry point. I think if and this is not financial advice, obviously, right? However, it is, it is my opinion, personal opinion, and I think that if I was to have $1,000 in the sideline, I would be okay going in here and maybe selling a cash secure put, a dollar cash secure put for like June on Open Doors, and I think right now you're generating anywhere between 15 and 20% for that cash secure put. There's nothing wrong with that at all. So you're basically going to get paid, between 20 or 15 to 25%. I can't look at the numbers at this point, but if you were to look for a cash secure put, you go on the options chain and you look at what June is looking like, right? And you say, okay, well, in June, what are the options for a cash secure put for open, right? And if they're not available, go to July and or May and see what you'll be getting if you were to do a $1 cash secure put on open. So that, say, for whatever reasons, that stock is over $1 on that date, well, then you get to keep the 15 to 25%. In terms of interest, in terms of averages, right? And percentages, that's 20 to 25%. It's extremely high for a month. Imagine you do that 10 to 12 months in a year, you have outperformed the stock market by over 100%. And that's exactly what I'm looking to do, right? I've been on Open Door for, I think, the better part of a year at this point. And I just keep kicking the can down the road. I did, I think, $2 cash secure puts at a point, and I went out, 6 months. I got a nice little chunk of change. And then, I switched them to 150s, and I went and I kicked down the road, the can down the road for 3 months. And then now I'm like at $1 cash secure puts, and I think I'm down to like 2026. But the point is that you're not locked in to buy that stock at that price point if you decide to roll, right? And that's pretty much what I've done. At this point, I don't think that I'm 100% getting the stock for free, but I pretty much have gotten paid almost $1 in premiums. So if I do put those shares to me in January, beautiful, because then my real would be like 20 cents or something like that per share, which is absolutely ridiculous. But that's what you can do whenever you're in the world of options. Like at any point I could have just taken those shares and got them put. I'm totally okay with that too, because I found my peace with knowing that if I go to a specific strike, if I get put those shares, I'm okay with that, because I can always average down, right? I can sell covered calls so that I could make my price point even lower. It's just the way that I roll. They Open Door, innovative business model. They are an iBuying platform that simplifies real estate transactions. They provide instant offers to sellers and a seamless experience for buyers. So people don't necessarily have to go into a house. If you live, let's say, in California and you want to buy a place in Texas or Mississippi, you don't have to go to Mississippi or Texas to buy the house. If you see something that looks extremely attractive and you look at the area, you do your research and you're like, hey, this is a good area. The median home price for this area is $100,000, right? And you see a house that's on sale for $70,000 and you're like, this is something that I could work on. I want to take the plunge. I have saved up this much money, and I would love to have a summer home or move or whatever. And you could go and you can buy a house with Open Doors Technologies, man. And that's pretty much what it does. It simplifies that experience. And I think people that are against it are usually big banks and obviously realtors, people that are in real estate, because they're losing money. Nobody likes to lose business, and that this is exactly what's happening here. They're going to lose business. There's definitely market disruption. They're a disruptor. I like disruptors. This is why I like SoFi. This is why I like Palantir, C3.ai. I like Unity. They are disruptors, and they're here to stay. Has the stock been beaten down in the last year or two? I think every single company has been absolutely destroyed in the last 3 months for sure. But we were downtrending because of COVID, and then we started getting out of that, that bearish market. We started seeing some 52-week highs, and now we're back down because of, again, in uncertainty, right? Open Door has some strategic partnerships. They have companies like Zillow that enhance Open Door's reach, and then they create the credibility in the market, right? So Zillow is a pretty good company. They also are in the digital market, and they are like, what? Open Door has some good business models, and they wanted to partner with them, and that creates attractiveness as far as I'm concerned, because you have a company that knows what they're doing, and then going in and doing a partnership with another smaller company, and they're creating revenue, right? There's also revenue growth despite the market fluctuations. Open Door reported $1.08 billion in revenue in the fourth quarter of 2024, right? It's indicating resilience, growth potential. It's indicating that that once real estate gets back on, and people really start feeling like it's time to take the plunge and buy a house, this stock is going to go to $10 easily. So I'm looking to 10x my money. Now, is that a guarantee? No, absolutely not. But again, this is why you have to do your due diligence, right? This is why you have to look at a company and say, hey, let me see what they're about. This is why you don't invest any money that you're not willing to lose, right? Because overall, there's a risk. There's always a risk with any company going to zero. But if you can mitigate that risk, that's exactly where it's at. And this is exactly why we also sell covered calls, right? So if a company, for whatever reasons, is attacked or shorted or whatever, or they just go out of business, then at least you have something to show for, right? You don't feel the pain as much as somebody that bought something at 10 and it goes to like 50 cents, 30 cents, and they're almost at 100% loss at that point. You've mitigated risks. You've mitigated your loss, and that's basically what we like to do. Operational efficiency when it comes to Open, the company's focus on data analytics and automation aims to optimize pricing and inventory management, right? They actually, I think, have made significant strides, and they've invested a lot in real estate. And I think, I think that once interest rates go down, and they will, because I think at this point, just the overall inflation and all these games that are being played in the stock market and just the volatility of it, I think that, Jerome Powell is going to step in and say, hey, we're going to have to cut rates. And I see 4 or 5 cuts, I see 4 or 5 cuts this year. I know that I'm, maybe getting ahead of myself, but that's what I just see, looking at the overall bearish trend in the market. And so if that happens, I think we're off to the races, right? They have experienced leadership. They recent appointments, including executives from Alphabet and eBay. They bring their valuable expertise to drive innovation in Open Door, right? And these people know what it takes to grow with a company. They know what it takes and the hard work that it takes to make it, an excellent company. Right, they've done it in the past, and they're looking for the opportunity and the challenges ahead, so that they can do this, with this specific company. Nobody leaves a place thinking, "Oh, I don't have a shot at doing the same thing again." Everybody leaves a really great job to say, "Hey, I'm going to start, my own new thing, and I'm going to take the challenge and make this company, as good, if not better, than the company that I come from." And that's just the way that it works. All right, here we go. Another companies that I am looking at, my savage stocks, it's Rivian. Anybody that knows me knows I like my Rivian. Everybody that knows me knows that I am trying to buy a Rivian with a cash secure put money and covered call money from Rivian. Great company. I like the market position that they have, and you got to understand that Tesla uh, just shedding the bed pretty much, and their loss is Rivian's gain. And at this point, it's a company that's on the up and up. Strong financial backing because Rivian is boasting significant investments from industry giants, right? Some of them like Amazon. Amazon actually has a 16% stake in the company. Volkswagen has invested $5.8 billion into Rivian, right? That tells me that these companies are some serious companies that have a very positive outlook on where Rivian is going. Nobody's going to just, burn their cash and throw it down the drain. You have to see something, right? These companies know something. Now, major institutions like T. Rowe Price, Vanguard, and BlackRock, they're also heavily invested in Rivian. Why do you think that is? Do you think these companies are in the business of losing money? They're not. And they see definitely a positive, especially now that the stock is near the $10 mark. You can gobble up right now the stock. I think that's exactly what's happening. I think it's consolidating. And I think whenever there's positive news, it always flies to $12, $13. That's a 20 to 30% jump every time. And then the overall market conditions take it back down. There's nothing that a company can do. It doesn't matter how positive news, right? Look at SoFi. SoFi is killing it. They've been killing it every quarter. Now, all these banks just have very positive guidance, right? Their positive numbers in the last week. Yet SoFi is downtrending. Why? It's just the overall feel of the market. There's nothing that a company can do except being good and keep on doing what they're doing. At some point, the market is going to take a breather. At some point, the overall market is going to turn bullish again, and these companies are going to fly. SoFi was $18, $17 not too long ago. Rivian is going to be $20, $30 before we know it. At this point, I'm looking to add. I'm selling covered calls so that I can take in premium, and then on really, really red days or weeks, I go in and I use that premium to buy the stock. And I'm going to keep on doing that. I'm going to keep on growing my portfolio and, buying on red days so that I can accumulate as many shares as possible of Rivian. And if I can average down, the better. They have a positive gross profit achieved. Quarter 4 in 2024, Rivian reported its first positive gross profit of $170 million. This indicates progress towards financial sustainability. And they're not even firing on all cylinders. They are just, right now, they're at the mercy of the overall market, right? But don't forget, these tariffs are for international companies. Rivian is a national company, okay? Now, of course, a lot of the components that they use come from the international overall market, which is one of the things that, we have to look at, right? However, I think that Rivian is positively positioned to take an upswing, man. They're gonna take a lift off, and then right now is the time to buy it. Personal opinion again, right? I'm not telling you what to do with your money, but if I had, a few $1,000, I would for sure go and sell some Rivian $10 cash secure puts for like June and try to bring in some cash, so that for whatever reasons Rivian is $9.99 on that date, you basically you get those shares for a lot cheaper. And if Rivian is at least $10.01 on that date, you get to keep the premium. I mean, your premium is now, as soon as you do the contract, as soon as you sell it, is yours, right? But they'll return your collateral, which is the $1,000 on that date, and then you can kick the can down the road and do another $10 cash secure put. on that date and bring in more revenue, right? That's just the way that I do, and that's the way that people that are into options do. Um, Again, very strategic partnerships, and they have a diversified product line. And then Alex, you were mentioning, the different multiple revenue streams, and I think that's one of the reasons that I like Rivian. It's very attractive. They offer the R1T pickup, the R1S SUV, electric delivery vans for Amazon. They're catering to both consumer and commercial markets, right? And that's how you make money, man. You don't just have one specific niche. You're all over the place, right? So Amazon is a behemoth, right? And Rivian is like, you know what? Let's ink some contracts. Let's do it. Right? And this is exactly how you make money, right? This is how you make for sure money, because just every quarter in, quarter out, these contracts are alive, and they're generating cash flow. They're generating revenue, and that's what you want from a company, right? They have upcoming more affordable models. I think that one thing about Rivian is that they don't have a $30,000 car. They don't have a $25,000 car. They have $100,000 cars, $90,000 cars, and they are after the F-150 market. They're after the 4Runner and Escalade market. That's what they are, right? And it's an electric vehicle that gives you up to 500 horsepower or more. The battery that they have actually is 800 horsepower. The battery gives you up to 500 miles per charge, right? Depending on the battery pack that you have. But for an SUV to have 800 horsepower, you know how ridiculously powerful that is, and to get 500 miles per charge, you're saving a ton of money in gas at that point. Now, that's one of the positives, and I think that's it's one of the reasons that I like Rivian, and I like where it's going. It's however, they do have upcoming affordable models. I think they're launching the R2 midsize SUV in 2026. And they're gonna get they're gonna try to capture the broader market segment, right, of people that are not necessarily gonna spend 100,000, 900,000 on a specific SUV or truck, right? What they're gonna do is they're gonna spend $50,000, $40,000, and I think that's kind of what their goal is at Rivian. I like it. I like the stock. I like the company. There's an environmental and social governance appeal, right? Rivian's commitment to sustainability resonates with the environmentally conscious investors and consumers. I'm from California. It's a beautiful, beautiful state, and we're all about our electric vehicles. There's ridiculous amounts of Teslas everywhere. Not as many as there were, in the past year, I'll tell you that right now. But you're starting to see a lot more Rivians on the road. There's a reason for that. And the stock being at $10 right now, it's a bargain. It is an absolute bargain. It is a crime. And I'm just, I wish I was rich so that I can buy it all, but I can't. However, every time I get a chance to buy 20, 30 shares, I'll keep doing that. 100 shares, I'll keep doing that, right? It's a growing market interest, right? The shifts in consumer sentiment away from competitors like Tesla has given Rivian a little more of a oomph, right? Because people are decided they're going to ditch their Cybertrucks, their Tesla, and that's Rivian's gain, like I said. So very huge market potential. The global shift towards electric vehicles is there. Rivian is very well positioned to capitalize on all that demand. Now the question is, how long is it going to take? Right? We don't know. But I'll tell you what I do know. I know that Rivian right now is at a very attractive price point, and I'm just gonna keep on hoarding as many shares as possible. That's one of the reasons that Rivian is a savage stock. And if you look at the cash secure puts for June or the cover calls for June, the stock is at $10, $11 right now. look at 1250s, look at 13s for June to sell covered calls. And if you own it, and if you want to own it, look at the $11 cash secure puts, look at the $10 cash secure puts for June, and get paid to buy it. Why not? Make some money. If you have $10,000, you can do 10. You bring in say $1.20 per share. You're bringing in $1,200 in a month, right? That can cover a lot of expenses. Why not? All right, we went through Open Doors, Rivian's. Now we're going to talk about SMCI, baby. I really like the company. This is a company I just started to trade in the last 5-6 months. Actually, less than that. I am probably 2 months. It has emerged as a noteworthy player in the AI-driven server market, and definitely part of the Salvage 10 now, because it's just so volatile. However, I believe it's grossly undervalued, given just how much upside there is on it. I've done an in-depth analysis on it, and I'm just, it's my perspective, obviously, right? But given all the data that I've come across, all the data that I've researched, it's a very good company, man. Let's see here. What do we have? Beach Boy. What's up, Beach Boy? How you doing, man? You haven't missed. You've missed me going into depth on Open Door Technologies and Rivian, right? I think you know kind of my case for Rivian, but Open you may want to look into. It's $1 a share at this point, so it may be too cheap for you, But there's a lot of people that they want to look for a bargain. There's a lot of people that are starting to invest, and if they have $1,000, why not look at Open Door and take the plunge on 10 contracts for cash secure puts, right? Or outright buy the stock where it is and sell some covered calls of 150 for 2026 and try to generate 50% off the top. Why not? Let's see here. Cannon Fodder, Savage time. That's right, baby. He is live, complete with baseball cap, glasses, and a map on the wall. There's Israel, bro. There it is. I like it. Yes, sir. Thank you for watching me, man. Look, I got 11 people watching, 11 thumbs up, and that makes me feel really good. Let's see, Juan Velasquez, great to see known people watching the Savage. Yeah, man. It's good to see you guys, man. Again, I knew that I was gonna go live, mid-afternoon today, and I put my little thumbnail up on the Discord. Hopefully, a couple of you guys are watching, and I'm good to see you guys around, especially the Bagel Gang, man. So yeah, SMCI and my reasons for liking it. Okay, I think it's definitely worth investing in, especially at 33, bucks a share, 32 bucks a share. Explosive revenue growth in 2024, man. It soared to 14.9. The revenue it did $14.99 billion, marking a 110% increase from the previous year, right? So that's insane. Any company that generates that much revenue, it's insane. It's you have to look at what they're doing and if it's sustainable, given the overall market conditions, given where we're going, given the need, right? I honestly think that this is self-sustainable. This is sustainable for sure. The AI server demand is there, and SMCI is a key supplier of AI optimized servers, man. It's benefiting from the surge in demand for AI infrastructure, and demand is just going to increase, right? It's just going to increase. People know that AI is the future, and it's about time that people start taking, a position in companies like this one. Is it a little expensive? You can make a case that the PE is a little high, right? But again, volatility. You don't have to buy it outright, right? You can do a cash secure put, do a $30 cash secure put for June and get paid, $2-3 per share. You have, $15,000, do 5 of them. Bring in $1,500, bring in $2,000, for your waiting to buy this stock at $30. Absolutely nothing wrong with it. Do you want to buy the stock outright? You can. You absolutely can. And I think you can get $3 for a covered call I think, to May, if not June. And what is wrong with that? You feel like you're too close to the action because it's 33 and you don't want to sell at 35, sell 40. So that's what I did. I sold some $40 covered calls for, I believe, January, and somebody gave me $10. Somebody gave me $10, man. So basically, I'm selling my stock at $50. There's absolutely nothing wrong with that, especially because my average is in the 20s. I'm almost doubling my money. There's absolutely nothing wrong with that. Do you want to do some cash secure puts and buy it on the cheap? Absolutely, you can do that as well. You can say, hey, I like it where it is, but I would like it even cheaper. So why not, sell some cash secure puts for 2026 January and bring in a lot of cash, in case we, get into, like, deeper in the bear market, and let's say the stock goes to like 25, 27 bucks, and it stays there, then you're gonna get put those $30 shares, but you bought them, probably cheaper than what they're gonna give them to you for. So there's nothing wrong with that at all. Um, Strategic partnerships. They have collaborations with industry leaders like NVIDIA, which positions SMCI to capitalize on the next generation GPU server demands, right? And like I said, next generation, this is the future. They're ready, man. They're ready. The overall market knows they're ready, but overall market conditions at this point are in flux, right? And it's just there's nothing that's for sure. Uncertainty. The market does not like uncertainty, which is one of the reasons that this stock is being kept from flying. I think every stock is being kept from flying at this point, right? But elections have consequences. Um, the analyst optimism for SMCI is positive. The price target, I think, averaging around $59 to $60 a share, and it's suggesting that there's significant upside for the stock. These are people that get paid, millions of dollars to do research, and they all are saying, on average, right, this stock is worth, close to $60 a share. It's at 33 right now, $32. So, I'm not the one saying it. The overall market, the analysts that are looking at this company are saying it. This stock is worth close to 60 bucks. Now where do you want to take a position? I this is a reason this is one of my Savage 10. And so I like it. The analysts like it. There's also market resilience. Despite the market volatility, SMCI has demonstrated it's resilient. The shares have rebounded after the tariffs were, the sell-offs were induced, right? The tariff-induced sell-off. And the shares went down to like the 20s, I think 27, 20, and then you just jump right back up because people that are in the know decided, hey, this is cheap. I'm going to go outright and buy it at market price. And this is exactly why I recommend a $30 cash secure put, because you can get paid, handsomely to wait to get it in, under 30. And you can even do $25 cash secure puts if you feel that that's too expensive for your taste, right? Go to 2026, see what the options chain is saying. I personally, like I said, I bought the stock, right? And I sold $40 cover calls when it had a big pop. And I took in $10 per share. And I'm not giving it back. I give them nothing, baby. Because that's my profession. I give them nothing. I take from them everything. And that's what I do. Because that's why I'm the savage, baby. Production innovation. Continuous innovation in server technology keeps SMCI at the forefront of the industry, and it's going to stay at the forefront in the industry. I mean, look at NVIDIA. NVIDIA knows this. They know something we don't. They know the market, right? They know what they're looking for, and this company is set. Global expansion. Plans to expand production capacity, including new facilities in Malaysia and other places, aim to meet the global demand, right? So what I don't know. I don't see the negatives, other than somebody's gonna tell me it's the PE is a little high. Every company out there, the PE is a little high. right? Especially when it comes to AI. But if you want to get at the forefront of things, you're going to have to take some risks, right? I'm okay taking a risk right now with SMCI in the 20s, right? That's what I decided. Again, you don't have to follow what I do. If this is not to your taste, not a problem. I'm sure there's some other fine companies out there that some people may want to take a position in, but I like the premiums that it generates. And so I'm going to keep on playing with it. The cost management is also a positive. Efforts to mitigate tariff impacts through modest price adjustments demonstrate effective cost management, right? So they're prepared. They were prepared for these tariffs. They know what they have to do. And at this point, it's just, they're I'm guessing waiting for a little more of a positive outlook and positive news. But, they're going to keep on doing what they're doing. They've recovered from challenges. They have some accounting issues. They have regained compliance, and if your bearish statement is that some numbers didn't add up, they have, they put out the numbers. They complied. They try to get shorted by a company that shorts, companies, and they came out and said, what, this is our internal controls. Look at it. These are internal numbers. Look at it, and you make your decision. And so I feel very positive about it. I think that there's definitely a lot of upside, and like I said, you can look at covered calls, right? The May 17th, 35 is giving you 250. You can look at the June 21 and strike price 40, like I was saying, and get $3. So you do 10 of these, right? That's $3,000 in your pocket. What is wrong with that? If you do this every month, right? You're generating at least $2,500. $2,500 a month, is something. For some people, that's their mortgage payment. There's nothing wrong with that. If you're holding, this stock, get paid for it, right? Make it pay you rent. You are the landlord. Your portfolio is the building that you own, and tenants have to pay rent. It's not personal, right? Cash secure puts. Again, I'm a big believer in cash secure puts. You look at May's, right? The strike price, like I said, 30s. Do some 30s, right? You get $2 per share. You sell some May 17th cash secure puts. Strike is 30. You bring in 10 of those. That's $2,000. So you're basically going to get paid $2,000 for the month to buy SMCI at $30. It's at 33, 34. It needs to come down at least 10%, if not more, right? So that you can then buy it on the cheap and get paid for that. And then the following month, you can sell some covered calls and generate revenue that way. Or it's $30.01 on May 17th. Guess what happens? You get your $3,000 back. Nothing wrong with that. You feel that's a little too expensive? Go to June. Go to June 28th. Get $2,800, in the game and get paid $1.80. You're down $2 in the strike price, and you're gonna get paid, $180 for 100 shares. And if you do this, multiply it by 10, you're getting $1,800. $1,800, to risk $2,800 in buying SMCI essentially at like what, 26.20. What is wrong with that? If you like this company in the 30s, why wouldn't you like it, for $26? It's that's the way I look at things, right? It's my cogent analysis of a company that I really like. So that's SMCI, and so I guess I could keep talking until I'm blue in the face about the companies that I like. I really could go on for hours and hours, but at the end of the day, everybody makes their own decision, right? Everybody does what they want with their money. And this is my position, and this is the way that I look at my personal opinion after researching, hundreds of hours these companies. It's my case for why they are my savage stocks, right? So and I like it. Anybody that's in the options game can probably see what I'm seeing. And then you can also go and look at the data and make a bearish case case for it, right? But I gave you some of the negatives for some of the companies, and I just think that the positives outweigh the negatives. And if you're in the options game, it is to make money, and the best way to make money is with um, companies. Personally speaking, companies that have a very high volatility, especially right now. The overall market being in flux the way it is. It's a beautiful time to get in the options market, man, and start generating revenue to pay off bills. These are real. This is real money. This is real money. You can pay real money, real bills. You can take care of the real life. And that's what I do. And this is the reason that I have my channel and I talk about, ad nauseum about these companies, because whoever's watching me, if you're interested in finance and you're interested in the stock market, and you're interested in making money, but you don't want to hold, a company for 2-3 years, you could start making money right away. You just have to do the work, right? You have to do the work. You have to take a position and say, this is, I have $5,000, I have $10,000, and I'm going to start. And I'm going to educate myself as to how these work and start taking positions, man. What do we have here? Juan Velasquez. Yeah, Juan Velasquez. Great to see people here. Great to see you, brother. Alberto Savage out here at the resort thanks to the gambling. Yeah, Bernie, that's what I'm talking about, man. So, yeah, put up a picture or something, bro. I definitely want to see it on the Discord, man. What's up, Bagel Gang? Hey, Bernie. Yeah, man, I was just, just going off of the stocks that I like and why I like them. I think Beach Boy's here. I think a couple of other people are here. Let me see who else is here. Wing Commander's here. Let's see, Rolando is here. Oscar Davila, Tom Kaufman, Alex is here. Cannon Fodder is here. So we have some definite Bagel Gang on here, and they've been listening to me yap for close to an hour at this point. But yeah, man. So the stock market tomorrow. We had a positive week. I guess we ended the week in a positive on Friday, right? And there was a couple of green candles up there, showing us that it's positive. At least the outlook, right, of what we're going to open up like tomorrow. However, yes, there's a lot of I guess positive sentiment, so to speak, right? However, remember this escalating trade tensions, right? The imposition of the sweeping tariffs by the U.S. from anywhere from 10% to 145% to China has led to retaliatory measures from China and heightened the global trade tensions as we know it, right? So I think that's going to be weighing heavily on the market. Do you want to pay $3,000 for an iPhone? That's what you got to look at. The fees are astronomical at this point. Do people want to pay, an extra $10,000-$15,000 for a car? Spare parts are going to be way more expensive. Look at your clothes that you get from Target and from Amazon. Shoes from Nike are going to be worth, $30-$40 more. And people right now, are losing jobs. We have 80,000 people that work for the government that were let go. Those numbers have not come in yet as far as how they're affecting us, how they're going to affect the overall economy, right? There's a lot of unemployment. Interest rates are still high. Inflation is high. I mean, you pick the negative news, right? Economic growth concerns. Economists have significantly downgraded their outlook for the U.S. economy for the first time in years, man. Projections for Q4 2025 GDP growth reduced to 0.8% from 2% earlier in the year. Economists from all over the world are downgrading the United States. That's insane, right? We got out of COVID. They're not downgrading Germany. They're not downgrading France or the UK, right? They're downgrading the United States, man. Why? because of the uncertainty. They know that we may not be able to keep up paying our bills. We're trillions of dollars in debt, and we're really picking a fight with somebody that owns our debt. You let me know what that is going to end like, man. What do you think that's going to end like? It can be positive, right? There's inflationary pressures, like I said. The new tariffs are expected to increase inflation. This is what happens when you play these games, right? Forecasts are now predicting to rise, or a rise of 3.6% by December 2025, up from 2.7%. That's a lot of basis points. And this could erode consumer purchasing power and corporate profit margins. And our companies, like I was just saying, companies are going to have a little more of a bearish outlook on their forward guidance, right? This is going to cause stock prices to drop. It's what happens when you start playing these ridiculous games and you don't really have a clear plan. And market volatility surrounding the trade policies and economic indicators have contributed to increase in market volatility, right? And this is going to persist. This is eroding investor confidence. This is eroding my confidence. And there is no clear path on how we're going to get out of the situation we're in, right? Supply chain disruptions. The tariffs are going to disrupt global supply chains. They're going to lead to increased cost. There's going to be operational challenges for businesses, and particularly for those reliant on the international trade. Think of Ford, think of Pontiac, right? Think of Nike, right? Think of every single company in the United States, except for a few, they're going to be disrupted, right? Look at lumber from Canada, right? So like people that are building homes, it's going to take longer. It's going to be more expensive. So overall, what do I think is going to happen tomorrow? I think we're going to downtrend even more. We may have a positive day or two, right? And then there's news out of the administration that Trump is gonna ease on some policies, right? As long as people come in and talk to them. But China already said they're not talking. They said we're not gonna be bullied. And I don't know if you guys are on TikTok, but I kind of went the rabbit hole, and I'm looking at a ridiculous amount of TikTokers from China, suppliers that are now 100% going to the consumer directly. They said, forget the middleman, come to us directly, and this is our address, this is where we're located, this is our information, look us up. And I saw something, there was I saw a couple of Chinese people speaking Spanish. Who do you think they're going after? They said, oh yeah, your Louis Vuitton bag is cost $30,000. Well, guess what? The raw materials for it cost $350, $400, and then you're charged, 100 times more than what we end up making it for, or what it costs to make it. Just come to us. We're using the same materials. We're going to use the same personnel to hand make these bags, Chanel, Louis Vuitton, and so guess what's happening? Now the consumer is going to go directly to them, because make no mistake, didn't China just pass a law that was making it okay to counterfeit products? Who is that going to affect? So I don't know. Let's see what Steve is. Beach Boy is saying, "What's up, Alberto?" Steve's tariffs exclude chips and phones. We should see a nice green Monday. Well, so okay. I did say that we may see 1 or 2 green days, but overall, the market is more than just chips and phones, right? I do know that computers were part of it, right? But at the end of the day, these are temporary. We have nothing clear to go by, and that's my point. It's the market doesn't like uncertainty. Just like in the last week we paused tariffs, right? Remember how they said we're going to pause tariffs for 90 days, and the next day the market was bloody as hell. Well, this is why, because the news starts settling, right, and people start realizing, well, what's going to happen after? Are we going to keep doing this and kicking the can down the road and just going, okay, another month, no tariffs? That's insane, man. The market doesn't like that. The market wants a nice, cogent, analysis of the market and what it can do to prepare, so that CEOs can then make a plan and say, okay, well, these are the conditions. Now we're going to, have this plan in place so that we can make revenue, right? And that's just the way that it happens. So again, I'm going to be okay either way, right? Because whether we're green or red, I have a plan. I have 3 plans actually per whatever case it goes. Because I don't like to get caught flat-footed. That happened to me, over a decade ago. I was just like, holy shit, I was expecting this, and so you end up with paralysis, right? That's not what I want you guys to end up as, right? I don't want you guys to get that paralysis. I want you guys to have a nice, good, plan or 2 in case the market is green or red, so you can get paid. So what do we do on red days? We sell cash secure puts. Personally, I do. What do we do on green days? Well, the stocks are running great. We're going to sell some covered calls and then take them premium. I sold covered calls on Friday. And so yesterday's video, I was saying, how I made almost enough money to cover my my mortgage for this month. And that's a beautiful thing. So we're not scared of the upside, and we're definitely not scared of the downside. But my point is that there is no clear pathway forward, right? There is nothing in place that says that this administration is serious. Nobody's taking them seriously, right? They said, oh, we're going to do 145% tariffs from China, and if they want to take it away, call us. And then Xi Jinping went on and said, no, we're not going to do that. He said, fuck no. You know what I mean? And he's telling us, we're prepared. I think that the finance minister for China actually went on TV on Friday and said, we're prepared for pain. We're prepared. The United States is only 15% of their overall output, right? So, I mean, they can start creating more by going straight to the consumer and cut the middlemen. That's what they're doing now. I mean, these TikTok videos that are all over right now are telling us, hey, forget the middlemen, come straight to us. We're in Guangzhou, China. You want a good purse? We're in Guangdong, China. So and these are companies that are making Louis Vuitton bags. They're telling you this is where we make them. This is where our workers hand make your purses, your wallets, your shoes, your high-end shoes and clothing. Armani, Chanel, Louis Vuitton, Brunello Cucinelli. This is where they make them. They say, we get the raw materials from Italy, from France, from Spain, from the UK. They're showing you all the raw materials and say, this is what we use to make the Louis Vuitton bags that you pay $34,000 for. Buy it for $800 from us. Buy it for $800 from us. Come straight to us. Don't believe us? Come and see. And I mean, that's what happens. And so how is that going to affect our overall economy? I don't know. I don't know, but I don't think it's good, because now people could go straight to the manufacturer and say, hey, I'm not going to pay $30,000 for a Louis Vuitton bag. How about I give you $900, $800, and you give me that same bag that has the same feel, the same smell, packaged the same, made by the same workers, using the same materials. Thank you very much. May I have another? That's what's going to happen. So how is that going to affect all these companies? I mean, given, not everybody shops at Chanel, not everybody shops at, Emporio Armani, Brunello Cucinelli. Of course not. This is a different clientele, right? But I did see a TikTok of a person that's like, the factory where they make Nikes. Everybody wears Nikes. They say you pay $100 for your shoes, $150, $6 for this pair of shoes, $10 for this pair of shoes. I saw shoes. I saw Nike shoes for $2. They have a $2 grand pile, and that's absolutely insane. But that's what we're doing, man. That's what's happening now. You want to go into a trade war with, the purveyor of like everything in the world. This is what happens, man. You don't go to war, especially a trade war, with someone that owns your debt. That's just silly. That's like me going to war against Chase. It's not gonna happen, man. Like, yeah, I can kick and scream and say this is unfair, but at the end of the day, Chase could just say, "Oh, that's nice. Here, let me cut your credit card. You have no more credit cards." And then I'm like, "Oh shit, I got no more Chase credit cards," making life harder for me, right? Anyways, that's my outlook, you savages. Thank you for watching. I'm gonna go downstairs now and be a dad. I was trying to go on for like 45 minutes, but it's already over an hour and 10 minutes, so I'm gonna start getting out of here. But I gave you my case for SMCI, Open Doors, Rivian, and C3.ai. This is up to you now whether you want to watch the video from scratch, from the beginning, and let me know what you think. Guys, thank you for the thumbs up. Leave your comments. If you have any questions, let me know. Hopefully I can come on. I'm going to try to come on during the week and maybe do a live while the stock market is open so I can talk about some trades I just made. But you know what? We'll see what happens, right? Just like with the stock market. I can think about one thing and promise one thing, but we never know what, life has in store for us, right? Because it happens. So thank you so much for watching, you savages. I really appreciate it. Overall, T-Rex market is what I see. I know that I like bears, but I couldn't find a bear. So I'm a little T-Rexy on the market right now. If you see Hockey Rink, tell them we have an avocado here again. So the avocado made its presence felt, and he wasn't nowhere to be found. If he would have said what's up, I would have taken the avocado out then. But he's not here, so he's lost, right? Anyways, you guys know the deal, man. I'm the Credit Savage, Wall Street, baby. I gave you my analysis. Let's make some money, man. You guys know that cash is king. Yes. But chaos is cash. And credit is power, baby. Peace out.